So we're all waiting for interest rates to be cut, to be lowered by central banks, the Fed in the US, Bank of Canada. And we're all starting to grow a little impatient. A lot of people trying to hold on to renew that mortgage, waiting to see if they could get a lower rate. Perhaps the Bank of Canada will cut rates mid-year or later this year. But I think it's quite interesting to look back and to see what happens when central banks cut rates. And in my opinion, what I think will happen when we do get a rate cut coming up perhaps as early as mid-year. Our first chart here shows what happens to the US market when the Federal Reserve pivots and starts to cut. And to me, this chart really just shows me that there really is no steadfast or hard pattern here. We see, I guess, back in the 2000s when rates fell, the federal funds rate, which is in red, when that fell, so did the S&P 500 in the early 2000s, 01, 02, 03. They cut rates, but the market fell with it. And then as rates went higher in and around 2005, so did the market. Again, we had that financial crisis in 08, beginning of 09. They cut rates. And then really from 2010, the market was off to the races, even with higher rates. Rates went down. We had obviously the pandemic in 2020. Rates came down. And now we've seen rates come back with a vengeance, right? We've seen rates going higher 10, 11 times. Market sputtered at first. And now market has reached all-time highs once again in the US. So is there a pattern there? Tough to say. But in my opinion, I think when they do cut rates this year, what I'm actually looking forward to is to actually see maybe initially the markets react positively to that rate cut. But then soon after, unless it is predicted that the Fed will cut rates many times going forward, you could see a sell the news phenomenon. Basically, buy the rumor that the fact that they're going to cut at some point, so you're buying into the market today, to sell when they actually do cut. Because maybe when they start cutting, maybe once or twice, that's as good as it gets. Or maybe the Fed isn't telling us something. Maybe they see some weakness that in the data that hasn't been released as yet, and they're cutting because they're seeing perhaps the economy is weaker than we all believe it is. So I think we could see perhaps the markets sell off on the news that they've cut rates, maybe not the first rate cut, but maybe on the second one. And to me, that would just be par for the course, right? We see it all the time with stocks. We buy into a stock thinking that the earnings are going to be really, really good. And what do investors do? They sell when those earnings reports come out, even if they're fantastic, because the average investor says, well, is this as good as it gets? And so they sell into strength. So maybe we actually sell our investments, or the average investor sells into the news of rate cuts. So be mindful of that. I think today we're in a sweet spot. I think the Fed has our backs. If the economy should falter, they're there to cut rates. If the economy should continue along its current path, the economy is strong right now, I don't think there's a need for the Fed to cut rates, and the market will just reflect a strong economy. So today, more so than maybe even when they actually cut rates, I think investors are in a sweet spot, and I like to call it a win-win situation.